Cava posted a beat on both the top and bottom line. Same-store sales surged 14% as foot traffic remained strong in Q3, and customers added more to their meal, like premium protein options, drinks, and chips. I'm joined live from the New York Stock Exchange with Cava CEO Brett Schulman. Brett, thank you so much for joining us again.
Thanks, Brooke. Thanks for having me.
Of course, of course. So the stock is down. It's feeling some pressure. What do you think investors are weighing on right now?
Well, we're not focused on the day-to-day gyrations of the stock. We're focused on building the next large-scale cultural cuisine category, Mediterranean cuisine, that unique cuisine where taste and health unite for the next decade and beyond.
Right, so not too worried about shares being lower today.
We're not focused on that.
And now Wall Street is worried a bit about that slowing sales growth in Q1 of next year. Are they right to have those sort of concerns?
Well, we had 7.6% traffic growth in this quarter. When you look at Q1 of next year, we're going to be lapping a 28% comp. So we had a significant comp next year. So obviously a bigger hurdle, but our long-term comp projections have not changed, nor has our long-term opportunity to create the next large-scale cultural cuisine category.
Now prices will return to a more normalized level. Do you think that you have enough pricing power to keep consumers coming back? Or do you think consumers might be a bit more choosy about how much they order?
Well, we've worked very hard the last few years to mitigate the price increases that some of our peers have taken. So we only took 4% back in January. We don't have plans to take price the rest of the year. And then in 2024, we plan to get back to more historical normalized increases of 2.5% to 3%. So really working on behalf of our guests to create that great value proposition so that our food can be accessible to a really wide audience.
And what is the current average price for a Cava bowl?
Well, our per person average, right, that's just everyone that gets an entree, is around $13.50.
And will that raise next year?
We talked about 2.5% to 3% as our more normalized price increases going forward.
And Cava did benefit from lower food prices last quarter. You are adding steak to the menu. How do you see Cava's food costs coming into 2024?
Yeah, we see it. We talked about on the earnings call how we had a little bit of benefit from chicken, but that we plan low to mid single digits in COGS next year. And steak is in test. If it succeeds in the next stage of the stage gate test, which is a test pilot in our markets of Dallas and Boston, then we'll look to launch that later in 2024.
You also did announce a significant increase in wages. Wages are up 8% from where they were a year ago. What is the current average hourly wage for a Cava employee at the restaurant?
Yeah, so this has always been core to our DNA since day one. The Cava is a place where you can build a career, not just have employment. So we have a track record over time of investing in our team members. Even back in 2016, we took our national starting wage to $13 an hour when many folks were paying $9 or $10 an hour in a market. So we're focused on continuing to drive that investment. We view our team members as assets, not expenses, to really sustainably scale our business as we grow rapidly.
Is there a price point? Is there, or rather, a current wage that you see, say, $18, $20, $21 an hour?
We don't frame it in those terms. We just look to be a leading brand competitively in all markets we operate in.
Right. In addition to that, catering does seem to be a growing business for Cava. What sort of growth opportunities do you see that, and what sort of demand is there for that?
Yeah, it's a tremendous growth opportunity, but we want to be mindful that it doesn't come at the expense of other channels. So how do we build that production to support catering without impacting our already significant average unit volumes, where some restaurants, we don't have a lot of extra excess capacity to do catering. It's a different type of production model. So we've been testing a number of formats. One we call our hybrid kitchen. We have 8 of those open today that have an extended back of house that allow for centralized catering production in support of some of those adjacent restaurants that may not have that added capacity. So we'll work on the test throughout next year, but we see it as a huge opportunity. Even with the hubs that we have open today and the test pilot restaurants, we catered almost every Major League Baseball team this summer, including the Texas Rangers on the night before they won the World Series.
Casual.
Yeah, and even teams like the LA Lakers, NFL teams, let alone all the office clients as well as school clients. So we see this as a great opportunity down the road, but we want to make sure we build our production architecture out to deliver a great experience once we do choose to launch nationally.
Right, and this has been a huge year in terms of growth, in terms of expansion. You guys opened 7 to 73 in total. That's the total you guys are expecting for 2023. Any particular location seeing the largest volume so far this year out of those new openings?
I think that's the great thing that gets us so excited about our brand, is that we see consistent performance across all regions of the country and across urban and suburban. So really great AUVs, very consistently. And that's what we saw in our comps as well. Whether it's every vintage and every region of the country, we see this consistent performance that shows the proven portability and broad appeal of our Mediterranean cuisine.
And any sort of headwinds up against the real estate company, I know that you guys have sort of baked in where you're able to mitigate those headwinds, but any that you're seeing right now heading into 2024?
Yeah, well, we started to identify that earlier in the year with the interest rate environment and the cap rate environment, maybe starting to put a crimp on some new development plans or having developers rethink the underwriting. So what we did back then was we increased our buffer from 20% to 30%. So this is the number of deals we sourced to get in the pipeline, knowing that there's going to be some slippage. So increasing that buffer really helped mitigate any of the impact that we're seeing in the development community so that we can not only stay on our development timeline and pipeline, we were actually able to increase our unit count guidance for 2023.